Hey guys, this is Manni Chopra and I'm with none other than Bob Singh, Mortgage Maharaja, and award-winning broker Akal Mair.
Thank you.
So excited to have both these guys here. This is the time when I'm going to be grilling them with loads of different questions, guys. So we know it's a tough market, right? I'm sure all your clients are being refinancing away and stuff like that. So let's start off with where we are in the market right now, swap rates, what's the sort of focus prediction of the next 6-12 months?
Okay. Well, we're coming to the end of the year, Manny, and the market's getting very, very competitive. Lenders are dying to push out money. So they're innovating their products. They really want to lend money. They're designing products so that the buy-to-let ICRs fit, which means high fees and slightly lower rates just to get the ICRs.
ICRs is?
Interest coverage ratios.
Okay.
Yeah, because
The rental calculation.
The rentals have to be sort of 25 or 45% above the monthly payment when you work it out at roughly 5.5%. So they want good coverage. So to get that through the door, they have to lower the rates. But because the rents haven't gone up so much, but they, it's number crunchy really. Yeah.
So it's tough, but they are lending.
They want to lend, yeah. So they're designing products, and even Skipton Building Society have launched some low residential rates, but with very high fees, which has got a bit of stick in the market.
What sort of starting rates are now for resi and for buy-to-lets?
Resi is high fours, 4.8 on a 5-year fixed rate, and buy-to-lets over the 5-year period, you're looking at average 6% a year.
So everyone has to stress test their deals minimum with 6%, yeah?
Pretty much.
Okay. And Akal, what do you see in the market, like especially for commercial to residential, which is what we're talking about today? What's the market like? Because I know it's very high at the moment, the interest rates, right?
Yeah, I think it's a tale of two halves. The first half of the year was all about, oh my God, 14 rate increases subsequently. We're now at 5.25%. Are we at the terminal rate now? I think we're there or thereabouts. I think we're at the terminal rate now. I think there's a lot more confidence in the market coming back in, especially in the investor space. I think clients have to take more due diligence on each site. I think the stress test calculations won't be a massive bearer on their deals. But I'm very optimistic, and our clients are as well. So what we're seeing more so, is more commercial transactions, commercial with residential elements, looking for planning gains, looking for permitted development gains. So we're seeing a lot of that at the moment. What I would say is confidence building. Interest rates, Bank of England, I should say, is probably at the terminal rate now. Mortgage lenders, as Bob said, they are coming down. It's nice to see interest rates sub 5% now. But yeah, arrangement fees are 5%, 6%, and 7%. But
with commercial, are they still wanting the permitted development in place, or is there a product there which will do it without it? So is that just bridging then?
Yeah. So if you're looking for any planning gain, you're going to have to go down the bridging route. So short-term finance, but for long-term gain. That's the way I look at it. So something has to always give. But the beauty is that there's a market for every single type of deal out there. It might just mean you put a lot of more equity on day one, and then you can seek the rewards at the end.
So the key is maybe work with investors more, maybe, do it that way, or, what else? What are the other options?
Well,
if you don't have the cash, then obviously you have to take out the maximum loan to value.
Yeah, I think, as an investor, you can't just think solely one dimension and just bank only. I think angel investing, joint venturing with people that are cash rich, time poor, and vice versa is very, very important.
That's a good idea.
Take advantage where you can.
Predictions for 2024? Any?
It'll be a good market, I think. I think as soon as the inflation starts to come down, bank rates should also start to come around. Swaps are falling anyway now. So I think it'll be a very good year next year.
So you reckon end of 2024, 4%, 4.5%, or?
Well, base rate, 4.
4. What's your prediction? Go for it then.
I'm going down about 0.5%. I'm the optimist. But no, listen, you've got to be a realist in this market as well, right? As much as we want 1% and 2% interest rates, I think that yacht is certainly sailed. I think, as a median for England, interest rates always been between 4% and 6% anyway. Bob might tell you a bit more. He's born just slightly.
Average is 5 over 25 years. So I think if we come down to 4, that'll be good enough.
I'll take that as well.
Brilliant, guys. Thank you so much. Looking forward to your talk later on in the day. Guys, do have a look at our website. I'm sure you know who we are by now. We've been in the market for 7 years. Next event, 9th of November, with another set of incredible speakers. Guys, I really appreciate your time this evening.
Thank you, Manny.
And looking forward to spending more time with you at the event.
High five.
High five. Cheers, guys.